Joining us now is Tom Siebel, C3.ai Chairman, CEO, and co-founder. Tom, a lot to go through, but let's start on the results. It looks like non-GAAP gross margins came in a little light of expectations. The street was looking for something in the 70s, came in at 69, but about in line with the results and the guide so far. Can you give us some color on the quarter?
A solid quarter, but we exceeded revenue, exceeded cash, exceeded earnings. As it relates to gross margins came down a little bit associated with all the trials that we're doing that are aligned with the consumption-based pricing model that we put into effect. And I think the uptake that we're having with the generative AI applications, which is just huge. And basically, the C3 generative AI, the value proposition is we take the customer live, whether it's Missile Defense Agency, an intelligence agency, Koch Industries, whoever it might be, we bring them live on generative AI in 12 weeks for $250,000. And after that, they pay by a consumption model. Well, in the initial applications, the margin on those trials is not high. I mean, we're going to invest whatever it takes to make sure that all those customers are successful.
And what about remaining performance obligations? It looks like it came in at $334.5 million, right around there. The street was looking for $380. How's the pipeline looking? And what sorts of industries are knocking on your door and wanting conversations?
Pipeline is growing substantially. RPO going down is a absolute direct effect of change to consumption-based pricing. So rather than doing enterprise deals of 10, 20, 30, 40, $50 million, we're doing these pilots for $250,000 or $500,000. And so RPO, and then it's just consumption-based pricing from there. So RPO goes down, revenue goes up. That's the way that model works. As it relates to industries, we're seeing massive uptake in defense. That is our most rapidly growing industry, defense and intelligence, with the CDAO, the Department of Defense, United States Air Force, Army, everything involved, contested logistics, predictive maintenance, what have you. So defense is a huge business. Manufacturing, supply chain, demand chain, financial services, businesses, in general, the industrial, commercial, and AI interest in enterprise AI has never been higher than it is today. And so the world is kind of coming our way.
So then what's the impact you expect from these domain-specific offerings, these 28 domain-specific offerings that you're announcing today, and how soon?
It's immediate. Okay, so I would say if we look at our pipeline of opportunities that go out the next 12 months, the pipeline for the product that is the longest is substantially generative AI. And people, when we get to industrial applications, they're not deploying generative AI for these kind of cute chat-BT, let's chat stuff. And we want to run factories, we want to run supply chains, we want to do predictive maintenance, we want production optimization, we want more productive human capital. So that takes domain-specific applications of these large language models for SAP, for Oracle, for Salesforce, for supply chain, for demand chain, for sales, for marketing, for customer service, for utilities, defense, intelligence. And so we have 28 applications that are available today. They can be ordered today on the Azure Marketplace, the Google Marketplace, and the AWS Marketplace. And this is a huge land grab in generative AI. And John, we are going to market.
Yeah, very exciting, Tom. I am curious about the Baker Hughes relationship, by far the largest contributor to revenue, at least up until this point. How is that progressing?
It's great. In other words, the Baker Hughes relationship is great. We're jointly selling with them all over the world. They are, certainly our most important partner, and we are on speed dial with them. And I don't know how it could be going better. And they're also a large consumer of our technology for internal use. So we're killing it. I don't know how many. I think we've closed over $650 million in business in oil and gas together. So I don't know how that could be going better.